Hey everyone, I am Charting Man Dan of the Chart Guys, technical analyst and trader of the last 13 years. And in this video, we're going to look at the charts on the Tesla earnings reaction, as well as check in on all the major sectors in the broader market on a day where we gapped down and saw some significant buying of the dip. So we'll start it off with Tesla earnings reaction. We are down a few percent after hours, and focusing on the missed gross margins is what social media is talking about. So we are looking at a bearish reaction initially. We'll have to see how it goes with the conference call and all that. We saw Netflix drop like 12% yesterday and then bounce like 15%. But what I care about is the levels: 101.81, 217.65, 163.91 is the key support level here, because we are in a tightening weekly range, and if that level holds, we maintain in a tightening weekly range. If that level breaks, we are back in a downtrend on every single time frame: monthly, weekly, daily, hourly. So 163.91 is the support level to be watching, and right now we are still a good bit above that level. So we'll see how things shake out from here into tomorrow, but we can say initially a bearish reaction. So we had a gap down open today. Overnight, the bears followed through a bit. Yesterday, we talked about how bears played defense. We had a double top on QQQ daily time frame, a double top on Amazon to the penny, a double top on IWM, and then we followed through with a bear push after hours. That being said, we had a gap down open, and the bulls bought and kept control the majority of the day. You look at SPY, and this is why I keep talking about the daily higher lows being my guide, because as long as we keep forming them, there is nothing to worry about as a bull on this chart. Anything above 407.44 is a daily higher low. We've been closing, look at the close the last 5 days. We've closed within a 0.4% range 5 days in a row. We're extremely tight and range bound, and we're going to get a break of that in the near term, and the NASDAQ's going to be key. So the NASDAQ, daily consolidation underway. Anything above 312.57 is a higher low, and we bounced all morning. We had a nice 5-minute equilibrium first thing, tightening range. And this was key. How we broke this range was going to have significant implications. Once we broke bull, we set 5-minute higher lows the entire day for the next 4 hours almost. We did not lose the 5-minute higher lows until right here. And then there was a little bit of profit taking at the end of the day. So what the bulls have to do from here on SPY and QQQ tomorrow, and you can see QQQ down a little bit with Tesla, but we have to confirm an hourly uptrend. So if we break the high of today tomorrow, the hourly uptrend is confirmed, the daily higher low is set, then giving us a new support level to be watching, and we'll then be looking back at the double top up at the high. So bulls are still keeping their control, and there are no red flags at this point. Lose the higher lows, we'll talk about red flags. We'll keep checking in on Tesla here because it's attempting a bounce. Financial sector keeps grinding higher. That was key for me as well. And there was something odd right when we opened today. Pre-market, XLF was hovering just above the low of yesterday. 33.08 was the low of yesterday. And here we are pre-market. And look at what happened right before the bell rang. Minutes before the bell rang, no volume. And we shot up 0.5%. And we opened nowhere near the low of yesterday. That threw me off a little bit, but it was clearly bulls saving a weak open, and we just kept grinding higher. Again, the financial sector is leading the way here, and it is a higher low every single day over the last 4 days, and we keep heading higher. So next resistance is still 33.55, and we topped out at 33.53 today. We've got space for a daily higher low next consolidation, but clearly our lead bull major sector over the last couple of weeks. Last 2-3 weeks, QQQ sideways, XLF going up, and XLV has been going up healthcare aside from the last couple days, but for the most part, a bullish couple of weeks. Still a daily uptrend. Bears are hoping it's a head and shoulders. We would have to fail 135.81 and lose the daily higher lows for the bears to take over here. But again, for the most part, no red flags in the broader market. I'm just waiting for it to change, but it's not changing just yet. One thing I'm going to be watching for is the potential that we break this sideways range bull on the NASDAQ, but then lack follow through. And that's something that we saw back here where we were fairly range bound, broke bull, and then dumped. That had to do with fundamentals, whether it was the FOMC or CPI, I forget. but that was a factor. But as far as our major tech names, we've got Amazon. Again, double top yesterday, broke it, not by much, but highest level that Amazon has seen in a couple of months. Apple is the lead tech bull, continuing to head higher. Apple is hitting the highest price that we've seen in 7 months. Just about 8 months at this point. 170.51 is resistance. Apple only has like a couple resistance levels before all-time high. It's still a ways away, just about 9% or so. But there's not a ton of resistance up there. Microsoft is still struggling at 292, but it is sideways and range bound. So this means the pressure is building. It's just like the tighter you trade within a range, it's just shaking up the soda can before you open it. And we're going to be looking for that opening of the soda can pretty much any day now, but entirely possible it takes another 2-3 days before the NASDAQ gives us a clear break. When we're in this sideways range, my trading shrinks. I'm trading less. I'm more picky. When we're in high volatile environments, there's a ton of opportunity. And when we are not, there is not. And again, that's key to being a successful trader over a long-term period of time. You're going to get all different kinds of market environment, and your trading must adjust to reflect the changing market environment. Because if it does not, you're going to lose money. You can't trade the same way in a bull market as you can in a bear market. You can't trade the same way in a volatile market as a market that is lacking volatility. So it's important that we are observing these things and recognizing them and then adjusting our trading behavior accordingly. IWM, still grinding, just under resistance, clear double top for us to be watching. The biotech sector, I was looking to buy the dip on the biotech sector today, but I wanted to see hourly get close to oversold, and we double bottomed at 80.56, and then it was all bulls from there. In hindsight, a very nice hold of support, and then tightening 5-minute range, broke bull, sideways range, broke bull. And that's a lot of opportunity for the bulls, but I didn't get the setup that I wanted, so didn't end up trading it. The majority of the trading I did today was on Riot. I was talking about it on the crypto live stream I did a couple hours ago, but it was just tons of relative weakness all morning. The NASDAQ had that tightening 5-minute range that I just pointed out. It broke bull, and Riot broke bear at the same time. And that's the first time that Riot has had that kind of relative weakness in the last couple of weeks. I've been watching it and trading it almost every day. And so that gave me confidence to be looking bearish pretty much all day. Almost every pop I was looking to short. And we are technically lost the daily higher low of 12.12. So on the verge of weekly consolidation for Riot. And again, that's the one way that I mitigate a lack of volatility in the broader market is I find the individual name that has plenty of volume and liquidity, although that liquidity is shrinking a bit this week compared to last, but I find that name, and that's the name that I focus on trading. So Riot obviously has way bigger percentage ranges than most names here. Last 2 days, we've dropped 16%. 2 days prior, we were up 19%. There's the volatility. So you got to seek out the volatility when there's an environment with a lack of it. When the entire market is volatile, you can pick one of 50 different names for a ton of volatility, but you've got to be a bit more focused. Watching a blue jay feed a baby blue jay. Got to be a bit more focused for honing in on that volatility when the broader market is sideways. The dollar is going to be key from here. If the dollar breaks, let's try it again. If the dollar confirms a daily uptrend, it'll be the first time in 5 weeks, and it will be a convincing hold of this weekly double bottom of support. If you are a broader market bear, a crypto bear, a metals bear, you really want to see that weekly bounce and that confirmed daily uptrend. If you are a bull of any of those things, you want to see fall through that double bottom and hit the lowest levels that the dollar has seen in a while, 10 months or so. Gold had the bear break. We were watching this 12-hour head and shoulders. It confirmed with a little dinky right shoulder, but zero follow through. That now has us watching for the potential of a weekly bull flag. Gold is a possible weekly bull flag. It depends on what the dollar does if I'm going to have any confidence in that or not. Silver, bulls also defending support. 24.56, we bounced off 24.64. It's a potential head and shoulders here as well. Again, it depends on the dollar. Dollar is going to dictate a lot about the metals over the next few trading days. Miners confirmed a little head and shoulders, but again, no follow through just yet. Oil, bear break of support into gap fill territory now, and we've got a good bit of space for a daily lower high to be the result of the next bounce. Weekly consolidation is underway. We knew that would be inevitable. We just bounced massively from the lows with no uptrend. And if we're going to follow through, we've got to confirm the weekly higher low and higher high. But no sign of the weekly higher low as that consolidation has just started. The next big question is, do we confirm the daily downtrend for that weekly consolidation to follow through? Natural gas daily consolidation is underway as well. Can the natural gas bulls confirm the first daily uptrend in 4 or 5 months? That's an astoundingly long time. And that's the question that we have from here. 4 hour has space for a lower high to be the result of the next bounce. Essentially, if we confirm a 4 hour downtrend, the daily retracement then gets significant. If we do not confirm a 4 hour downtrend, it's going to be a healthy daily higher low. So swing trading natural gas bulls that missed that initial move the last few days are definitely keeping an eye out for a potential entry in the coming days to look for this higher low. The stop loss would be a long ways away still. So the way that I do it as a trader, when that's the case, is I need to see indication of the daily higher low being set, and I need to then make the statement, that is either the daily higher low or I am wrong and want to stop out. And your risk is way smaller with that mindset because your stop level is way closer versus using that low. So it's definitely a boring market in terms of what we've seen the last 2.5 years and what we've got the last 2.5 weeks. But that's going to change shortly. And again, you just got to find the volatility while we wait for boring markets to then pick up again. And keep in mind that we will see periods of, I can remember back in 2017, 2016, 2017, when it was just slow grind up only bull market. It was nice for bulls and it was nice for swing trades and long-term positions, but it was boring. The range of the days that we had on SPY, look at this period right here. That is just nothing going on for 5 weeks. Nothing going on. So we will resort to that eventually in the market once we see these long-term tightening ranges continue to tighten up. So just be grateful for the volatility while you have it if you're a day trader. And of course, swing traders and long-term holders are hoping back for the 2016, 2017 slow grind up forever days. I appreciate you watching. Thanks again for the likes and subscribes. And we will see you next time. Do good things.
Hey, you.